Hey, what's up, my friend? So in this video, I want to share with you the biggest mistakes that I've made in my trading career. So you don't have to make it, right? So you don't have to, spend countless hours, money, right, on all these mistakes that I've made. So profit from my experience, profit from my misery, profit, right, from my mistakes. So that's what you'll discover in today's video. So first thing first, right, if this is the first time you're watching my video, right, hit the thumbs up button and the subscribe button below. This way, whenever I publish a new video, you'll never miss it again. Okay, so go do it right now. Just hit the thumbs up button and subscribe to my YouTube channel below. The link is all below. All right, have you done it? Then let's get started. So the first mistake, let me share it with you, right? So when I got started in trading, right, the reason why I got started in trading is because I know that I don't want to work for somebody out there. I wanted to be in control of myself, my destiny, right? I don't want to, answer to anybody. I don't want to get involved with politics. I don't want someone to limit and say, hey, Rainer, you can only make X amount each month because you're worth this much. I don't want any of that. So that was the main reason, right, why I got into trading, because it offers, endless possibilities out there. So that was my why. And when I got started in trading, no one taught me or tell me, how to go about it. So naturally, the most common sense approach that I had is, to explore what's out there. I read books, blogs, websites, everything and anything that I can get my hands on, right? I would have, devoured it. Studied stuff like, harmonic trading, price action trading, trend following, indicators, MACD, RSI, Bollinger Bands, pivot points, whatever you name it, right? I would have probably, tried it as well. And therein lies my mistake, my problem, is that whenever I come across something new, well, there's nothing new in trading out there, but whenever I come across something new, at least new to me, right, I would try and trade that, particular strategy or technique. Okay, so, 2-3 trades might be price action trading. The next 2-3 trades is chart patterns. The next 2-3 trades is maybe harmonic patterns. The next few trades is maybe indicators. And you can see that I was simply, right, hopping from one trading strategy to the next. And can you see what's wrong with this? The problem with this is that my actions, my trading actions, they are inconsistent. And when you are inconsistent in your trading actions, what happens? Well, you get an inconsistent set of results. It's a no-brainer, right? If you try many different things at one time, your results is going to be many different directions. Okay, so that was the takeaway I had, is that, no, man, I can't keep doing this, forever, because I'm going to get, inconsistent set of results because my actions were not consistent. All right, so the key takeaway is that, if you want to be a consistent trader, you must have a consistent set of actions. There's no guarantee that you will consistently make money, because if your actions, right, or your strategy doesn't have an edge in the markets, you will lose consistently. But you now know, right, what is not working, and then you can make fine refinement and tweaks, right, to the strategy, and then improve on it and make it profitable. But if you are inconsistent in your actions, you're all over the place, there's no way you can make any refinements or improvements to your strategy, and that is key. Okay, so that's the first mistake I made. I was, hopping from one trading strategy to the next, and inconsistent actions, inconsistent results. Mistake number 2. So as mentioned, right, I wanted to, get involved in trading, and my plan, right, this plan I had is that, I am going to take up all my savings that I had, borrow some money from my parents, right, and then fund my trading account with $50,000 in trading capital, right, 50K. And I figured, if I make 40% a year, don't ask me how I came up with 40%, right, it's just a number that I pluck out from somewhere, from here, and I figured, 40% of 50K, that's about, hey, 20K a year, $20,000. I can live with $20,000 a year. I'm single, I was available, I had no commitments, no liabilities, right? Hey, $20,000 a year, enough for me. So that was my plan. And along the way, I kind of realized that 40% a year is actually pretty darn good, right? I don't see, many traders out there making 40% a year consistently. And then I realized that, if I could do this for 5 years, after 5 years, I realized that I would still be back at square one, right? Because I make 50K. Let's say 40% of $50,000 is $20,000. Spend it on my living expenses, and whatnot. Okay? So that means that every year, whatever that I made, right, I spend it and I'm back to square one, $50,000, which is my original amount. So this way, right, even if I were to trade on 5 years or 10 years, this amount will not grow. And my standard of living will not improve. And then I ask myself, what is wrong? And that's when I realized Okay, I had the wrong expectations about trading. It's not that 40% a year is no good. It's pretty darn good. It's really, really good. But when you're trading, right, the business of trading is that you need money to make money in this business. I mean, sure, you can make 100% a year consistently, but if you only have $100 or $200, that's not enough, right, to survive. Okay, so in trading, you need money to make money in this business. So that was my second mistake. I did not have this expectations. I thought I can take a small amount of money, like few hundred, few thousand, turn it into millions along the way, because that's what you read in books, stories, or news, or how those traders magically did it, right, turning a small pot of money into millions of dollars. So I just didn't have that right expectations to start with, right? So the key thing is that you need money to make money in this business. And this led me right to the third mistake. Okay, the third mistake is that I thought that hey, if you want to be a trader, you must be a full-time trader. That's where you make the most amount of money, right? Full-time trading, right? Short-term trading, scalping, that's how you make the most amount of money. And I kind of realized that that's not really true. Okay, and let me explain why. So let's say, for example, right, you are a full-time trader. Maybe you're trading off the shorter term time frames, all right, 5 minutes, 15 minutes, whatever. And let's say, right, because you are trading off the lower time frame, you have more opportunities, and you can do on average, let's say 40% a year. Again, let's assume on a $50,000 trading account. So that's like what, 20K, right, a year. So since you're doing this full time, you don't have any other source of income. That full 20,000 is used to spend on yourself, right? Maybe pay for your food, living expenses, whatnot. Right? If you have a family, then that will be pretty difficult to survive on. But let's say you're single, you're available, right? You don't have any commitments, then hey, $20,000 might make sense. So at the end of the year, right, you made $20,000, but you withdraw again minus 20K because for your living expenses, and you're back to $50,000 the next year. Okay, the next year and the next year, you're always back to square one, $50,000. But now, let's say, for example, you don't do this full time. Maybe you do this part-time. Maybe you trade off the higher time frames, like the 4-hour or the daily time frame, where you don't have to be glued to your monitor all the time. You can even have a part-time job. You can have even a full-time job, even if you want. Let's say you go with this second approach, right, where you trade part-time. And because you trade off the higher time frames, right, your returns, your percentage returns, right, are not that great. So you do about, say, 20% a year, which is pretty much, half, right, of this someone who's trading full-time. But then, because you are doing this part-time, you have another side gig, maybe a full-time job or whatever, you can actually, add extra funds to your trading account every year. Maybe you save, an additional $500 a month, right, and use that money to fund your trading account, to trade larger. And that's about, $6,000 a year in extra that you can fund to your trading account, okay? And on top of it, right, because you are having a full-time job elsewhere, you don't have to touch the money in your trading account. That money inside, you can let it grow and grow and grow. Okay, so given this numbers, okay, you make 20% a year on a 50K account, and you add in about $6,000 every year to that trading account. How much would you make, let's say at the end of 20 years? I'm sure you are able to live for the next 20 years, to trade the next 20 years, and putting these numbers in, right? This is the amount of money that you can potentially make. I want to use the word potentially, right? Because there's no such thing as guarantee in trading. So principal amount 50K over here, additional $6,000 a year, 20 years to grow with a 20%, let's say, annual return each year. At the end of the 20-year period, you're looking at 3.2 million, 3.26 million. That's I think that's something that you can pretty much retire on. Okay, so can you see how part-time trading and full-time trading, it doesn't mean that full-time trading you can definitely make more, because the fact that you need to pull out funds from your account, right, it kind of makes the compounding more difficult compared to someone who can trade it part-time, grow their account, add in more funds, right? They can actually make pretty decent or large amount of money, right, within a decent period of time, 20 years, right? This is not a get rich quick scheme, right? This, I would say, is a get rich slow scheme. So we can see that part-time trading, it doesn't mean that doesn't mean that it's for people who are lousy or whatever. No, it's a viable approach, right, to actually grow your wealth over time. So you can actually grow serious wealth even if you're trading part-time, right? So this is something that I made a mistake, right? I thought you have to trade full-time to make a ton of money, but no, right? Trading part-time, trading off the higher time frames, it is possible, right, to grow your wealth steadily as well. Okay, and finally, mistake number 4. Okay, I want to share this with you. So this is important. Okay, and I'll just dive in and tell you what is this mistake straight away. Is that I focused on the strategy and not the concept. So this might seem foreign to you, right? So let me explain. So what is concept, right? So if you have seen my videos, right, or you see my comments, right, often traders will ask me, hey Rainer, what is the best moving average out there? Hey Rainer, what is the best time frame to trade? And I always say that hey, there is no such thing as best out there. You need to find something that suits you, right? You need to focus on the concept that I'm teaching in the videos, and not the specific parameters, moving average, or indicators. Focus on the concept. So concept could be something like trend following. Trend following is a trading concept. It's a trading methodology. Okay, and trend following, the key idea behind it is that it's very simple. You trade many markets, right? A wide variety of markets. You trail your stop loss in the hopes of riding a trend, okay? And if the market, right, doesn't go in your favor, you just, cut the loss. That's pretty much the key concept of trend following. Trade many markets, ride the trend, and, risk small, bet small on each trade. That is the key concept of trend following. I haven't talked about the strategy yet because we have not discussed about what is the exact entry parameter. Well, what is the trailing stop loss that you're going to use? What is your risk management? I've not talked into the exact details of that because what's important is the concept. So let me, just share an example with you. Let's say, for example, you are, I'm going to, test a trading concept, right? And I'm going to trade these markets, these 20 markets over here, right? Gold, copper, silver, palladium, platinum, right? Then you have the indices, S&P, you have Euro, Yen, Euro, Dollar, Mexican Peso, British Pound, right? All these markets, right? It's about 20 markets in total, okay? And the so-called strategy that I'm going to use is this, right? I'll go long when the price closed the highest over the last 200 days, okay? So basically, when the price makes the highest close over the last 200 days, I buy. Simple. I will use a 3 ATR as my trailing stop loss. So for those of you who are not sure what this means is that, let's say, for example, this is the price breaks out. Highest close over the last 200 days, I buy, right? Let's call it B, right? So what I'll do is that I'll have a trailing stop loss, right? So how this stop loss is derived is that what you'll do is you pull out the ATR indicator, it stands for average true range, and it would tell you, right, what is the volatility of the market, right? The historical volatility of the market. And let's say the value is, let's say, X, okay? So what you'll do is you just multiply X by 3, right? Let's call it 3X, okay? So what you'll do is, let's say you buy at a price of, say, $100, okay? Your trailing stop loss will be $100 minus 3X, right? And let's say the value is Y. So Y would be your trailing stop loss. So as the price moves in your favor from $100, it moves up to $150, right? This value of X, right, which is the ATR value, it will move along the way. So what you do is that you just adjust it accordingly, right? So $150 minus 3X, right? And this Y is your new trailing stop loss value. Okay, so you can use a trailing stop loss to ride the trend. You can even use moving average, right? I guess there are many ways to do it. The point is that in this example, we are using 3 ATR as our trailing stop loss. And we risk 1% on each trade. Okay, so the opposite is just for the short rules, which is this. So here are the results, right, that I want to share with you based on this simple set of rules, this simple concept called trend following. So in this case, we use a 3 ATR. Okay, so I'm just going to pull out and share the numbers with you. So this is the backtest thing that I've done on that portfolio of markets with that exact trading rules. So 200-day breakout with a 3 ATR trailing stop loss. You can see that over the last 18 years, right, this is how the system has performed, right? On each year, the results over here. Okay, these are the year-on-year results, and this is individual months, right? How each strategy has performed. Like 2000 June is down 0.1%, 2000 July is up 4.1%. Okay, and annual return about 10.44%, right? With about drawdown of about 24.6%. So now at this point in time, right, many traders they like to ask, hey Rainer, why did you go with 200-day breakout? Is that the most profitable? Right, so you can see that that question focuses on the strategy itself, the exact tactics and parameters. It doesn't focus on the concept. And I can tell you that the 200-day breakout, there's nothing magical about it. I can do 50-day, 100-day, 149, 175. The strategy will still be profitable. Okay, if you don't believe me, this is the 50-day breakout. Again, with 50-day breakout 6 ATR. Right, I changed the trailing stop loss. I changed the breakout parameters. Again, this is the results over the last 18 years. You can see over here. generally still profitable. Annual return now dipped to 8.85%. Okay, with a maximum drawdown of 14.9%. Return dip slightly, drawdown, maximum drawdown dip as well. You can see, right, that there's really nothing magical about the breakout number of breakout days that we trade or the trailing stop loss. I can change this to a 200-day breakout with a 6 ATR. Okay, these are the results. Still profitable in the long run. Annual return 8% a year with about 11% maximum drawdown. So you can see that generally this strategy, no matter how you change it, you change whether it's a 200-day breakout, whether it's a 50-day breakout, a 3 ATR, a 6 ATR, the concept works. Okay, this strategy, this concept, it works in the long run. So this is why I tell traders, don't focus on the exact parameters. That's not important. What's important is the trading concept that you are trading. Because if your concept is wrong to start with, right, no matter how you tweak, you improve, you edit, you modify your parameters, like a 200-day breakout become a 210, 220-day breakout, it doesn't matter. It's not going to work. The concept is important. You must be trading, right, a correct trading concept to start with. Your trading concept must have an edge in the market. So in this case, it's trend following. If you don't want trend following, there are, traders who trade mean reversion. That works as well. But again, the concept must be, correct to start with, right? So often traders, they look at it backwards. They find the best parameters, the best moving average, the best time to trade a breakout, the best trailing stop loss, the best exit. But their concept is wrong. Everything, the house of cards collapse. Okay, so this is a mistake I made as well, right? I focus on the strategy and not the concept behind the trading strategy. Okay, so I hope that kind of hammers home the point that I was trying to make. So let's do a quick recap, right, to what you've learned today. Number one, right, you must have a consistent set of actions to have a consistent set of results. Number two, you need money to make money in trading. Don't be like me, right? Naively thinking I can take a small amount of money, make 40% a year and just survive on whatever I make. No, right? You need money to make money in trading. The more trading capital that you have, right, the more money you can potentially make. Okay? You can grow serious wealth, right, even if you are trading part-time, as I illustrated the example earlier. And finally, right, focus on the concept, not the trading parameters, not on the number of breakout days, the moving average, the Bollinger Band, the RSI, the best parameters, the best number. No, that is not important. I mean, it's important to a certain degree, but not as important as the trading concept that you're trading. Okay, my friend, does it make sense? Okay, so now, right, we have come towards the end of this video. If you want to learn more about my trading strategies, the techniques, the approach that I use to trade the markets, what I want you to do is to go down to my website over here, tradingwithrainer.com. Just scroll down a little bit, right? And depending on your needs, right? If you want to learn how to write massive trends in the market, like for example, we spoke about trend following briefly earlier, and you want to learn more about it, then go and download this ultimate trend following guide. Just click this orange button and I'll send it to your email address for free. Or perhaps you're more of a price action trader. You want to learn how to read market structure, support resistance, identifying, a volatility contraction, identifying, breakout trades, candlestick patterns and stuff like that. Then go and download the ultimate guide to price action trading, where you learn how to, better time your entries and exits, right, when trading the markets. Again, click this orange button and I'll send it to your email address for free. All right, so with that said, I've come towards the end of this video. If you've enjoyed it, hit the thumbs up button and subscribe to my YouTube channel. Any feedback, questions, leave it below, right, and I'll do my best to help. With that said, I wish you good luck and good trading. I'll talk to you soon.